morning bull market. We've hit 9,300 for the first time on the Nifty, and the Sensex is now once again within kissing distance of that 30,000 mark. Let's invite someone who has been voicing this view for a while, that markets like the US don't offer too much value. It is in the emerging market space where there is a lot more value. Marc Faber of the Gloom, Boom and Doom report joins us now to talk about that. Mr. Faber, good afternoon and thanks so much for joining us. You know, you've repeatedly told us that you see more value in emerging markets compared to developed markets. But this has been your theory for a while now. Do you think that the story has played out, or do you think that markets like India still have more steam?
No, I think what I maintained more than a year ago, that over the next 5 to 10 years, India would outperform the US and other Western markets, I think is still a valid story. I think in general, you have a new government, Mr. Modi, who I think is trying hard to implement some reforms, and he has actually a far better chance to implement these reforms than, say, Mr. Trump. Secondly, and this is something very interesting for me as an observer of economic history, I think central banks in emerging economies, such as India, as an example, are much more responsible and much better educated about the perils of money printing. And I think Mr. Rajan and Mr. Patel have done a very good job so far in stabilizing the rupee. In local currency, the Indian market is up something like 13% this year. But in dollar terms, the market is up close to 18% because both the stock market went up and the rupee went up. The stock market is not that important for the majority of Indians, as you know, because only a minority that owns Indian shares. But the currency is very important for the majority of Indians and for foreign investors. Because if you have a steady currency, a strong currency, you have money coming from overseas looking for investments in India. And so I remain actually quite constructive about India. And I think over the next 10, 20 years, India has the potential, I'm not saying it will realize it, but it has the potential at least to grow, I don't know, at 5 to 7% per annum each year, which is huge compared to the growth that we have in the US and in Europe.
Mark, hi, good afternoon. So, you know, that's an interesting point you brought up, because that was actually my follow-up question that, you know, since you do track all these currency movements as well. So strong currency, strong market, but we haven't seen too much of foreigner participation in our market. It's really been domestic liquidity or domestic money which has driven the markets. Do you think we over the next 6 months we could create a Goldilocks scenario where domestic liquidity is anywhere there and even the foreigners start to participate?
Well, foreigners have also participated to some extent. But look, I tell every wealthy American and European family the same. India, according to PwC, the consulting auditing firm, will be, say, in 20, 30 years, the second largest economy in the world, similar to China. Now, how much money have wealthy families in India? Maybe 2-3% of the money. If they have $1 billion, most of them have maybe $10 million or less in India. And that, in my opinion, is a mistake. They should have at least 20% of their money in Indian equities, in Indian properties, and direct investments. And we don't have to look backwards, we have to look forward. The US stock market now is 53% of global stock market capitalization. In 10, 20 years' time, I think it will be something like 20% of stock market capitalization. And India, China, and other emerging markets will be more than 50%.
Mr. Faber, at the end of the day, every bull market is predicated on earnings and economic growth. How does India stack up compared to some other markets like China and, say, Vietnam? Are we doing better on those parameters?
I have to laugh because I agree with you. But in a money printing environment such as we had in Japan, in Europe with the ECB, Bank of England, and the Federal Reserve, you can have a bull market even the economy is actually going down or not recovering much simply because of money printing. But I agree with you in principle, it's predicated on nominal GDP growth in the long run and on corporate earnings growth. And in my view, in the long run, if you take, say, the US, what is the future growth rate of the US? Maybe 1 to 2% per annum. So corporate earnings, in my view, will grow at 1 to 2% per annum in the long run. Otherwise, eventually, if they grow much faster than nominal GDP, corporate earnings will be nominal GDP, which is not possible. Anyway, in India, if you have growth rates, and I'm relatively conservative here, some people accuse me of being too negative about the Indian economy. But I'm saying, say, if India can grow at 4 to 7% per annum for the next 20 years, then earnings, in my view, will also grow at 4 to 7%. In some corporations that are well managed, they'll grow at 12%, maybe 15%. In some companies that are badly managed, maybe they won't grow at all. So you understand? So my view is simply based on simple economics, and I'm not an academic at Ivy League university. I observe what is happening in the world, but simply based on, say, common man economics, I think India has a good potential. And I believe that foreigners will come into the market near the top. And that will be the time we have to sell Indian shares to the foreigners who will rush into India because they think it's the new El Dorado.
Of course, Mark, India is not the best Asian market, by the way, this year. It's the place where you sit, Thailand. And of course, there the currency has always been strong. But Mark, what about commodities? Because that's also a space that you track. I wanted your thoughts on, some of the commodities like metals, the ferrous metals, non-ferrous metals, the kind of bull run that we have seen. Has that come to an end, or do you think this is just a bit of a correction going on right now?
I think it's kind of a correction. I think we've seen the lows, but a correction in commodity markets, 10, 20% is a huge move because as an investor, you have the rollover costs. So, and you don't have dividends on commodities, basically. So I think that I'd be a little bit careful about economic sensitive commodities such as steel, iron ore, copper, aluminum, and so forth. But I still like precious metals because if you look around the world and you see all these academics in central banks, and if the US, in the US, we're now 8 years into an economic expansion. This is very old expansion. We're more than 8 years into a bull market, which is a very old bull market. If the market goes down substantially, if we have a recession again, and we can expect that in the next 1 or 2 years, then the Fed, in my opinion, they will launch QE4. They may not call it QE4. They may call it helicopter money or Trump money or whatever it is. But I think they will print money as they have in Europe and Japan up to this very date. I mean, Deutsche Bank has recently produced a statistic, or I think it was Bank of America, whereby in the first 3 months of this year, the balance sheet of the ECB and the BOJ, the Bank of Japan, increased by more than $1 trillion. So annually by close to $4 trillion. We still have money printing. And we don't know where it will end. I think it will continue because that's all they can do.
Mr. Faber, just before we let you go, I have to ask you one last question. I remember, we've been talking for many years now. I remember a year ago you had complained about how you tried to get a visa when you were trying to come to India, and the business climate was just not conducive enough. It was the toughest process for you. Since then and now, have things changed a lot as far as the climate to do business is concerned in India?
Yeah, well, I have to try to get another visa and then I tell you. But I think in general, what I hear is that there are some signs of improvements. India is not a country. It's a continent with more than 1 billion people. So in one state or in one city, you may have a mayor or a government that is very pro-business. And in other states, you still have this socialist mentality that doesn't really want any improvement because the politicians extract a lot of money from the system. So it's like it's easy to introduce regulation and laws into a country and increase the bureaucracy. Mr. Trump is finding the same. It's very tough to dismantle it. It's very difficult. And I think Mr. Modi has done about as much as he could, but a lot remains to be done.
Okay, Marc, thanks a lot, as usual, for joining us.